Yeah, thank you very much for the kind introduction. Very happy to be here on stage. And in the next 15 to 20 minutes, I'll take you on a journey with a slightly different perspective of focus. So on the one hand, not only talking about soil health, but more about nature and healthy nature, whereas healthy soil obviously is a very important part of. But then also through a financial lens and how we can actually finance the so desperately needed transition towards more sustainable land use and soil use, etc. So let's start. Actually, exactly 1 week ago, I was attending the annual meeting of the Forum for the Future of Agriculture and the European Landowners Association in Brussels. And I shared the stage there with a lady called Sherry Muison from BlackRock, which is, as most of you know, probably the world's largest asset manager. So how did that happen? I mean, I'm an agronomist with farming background. She's a chief investment officer at BlackRock. How did we end up on the same stage? I guess what brought us there is that a previously reliable service provider doesn't deliver anymore as usual. And I'm talking about nature and the ecosystem services it provides. The farming business case was built on the reliable and free of charge provision of fertile soil, healthy soil, clean water, predictable weather patterns. And this business case clearly came to an end as we can experience it around the globe. At the same time, BlackRock resumes in a recently published report that markets for long have undervalued nature, but now start to price physical natural capital risks as real assets are at stake due to the new behavior of nature. So some people call this a Minsky moment of agriculture of nature, sort of saying that we might face a sudden revaluation of markets as natural capital risk related liabilities are underpriced and assets overpriced. So following this, taking care of nature, and soil obviously is part of it. Taking care of nature isn't, I guess, a philanthropic exercise anymore funded by some donations or sustainability budgets. Taking care of nature is an investment into a critical infrastructure, into a physical infrastructure, which is critical to business continuity. And investing into functioning nature, international capital actually creates corporate value because it secures business continuity. And therefore, such investments should be considered an asset. Today, they're mostly considered costs and making stuff more expensive, but actually they create corporate value and should be assets. Now, what defines an asset? It's three things. First, of course, it should generate economic value. Second, it must be identifiable, how it's called, which means it must be capable of being impaired at any point of time. And third, it must be controllable, which means you must be able to hold it and exchange it. When we started the Landbanking Group 3 years ago, we were looking for solutions that could account for investments into nature, into healthy soils, into such things in a way that they can be accounted for as assets, but we couldn't find any solutions. This is why, together with chartered accountants, we built Ländler. Landbanking Group is a company. Ländler is a digital platform. We built Ländler to measure, manage, and monetize natural capital investment in such a way that they can be accounted for as assets according to applicable accounting standards, IFRS. Now, who's we? The Landbanking Group is a Germany-based, Munich-based fintech, 3 years old, with by now about 60 colleagues from both business, tech, science, serving about 35 plus customers from different industries, built environment, real estate, but also land stewards, farmers, foresters, etc. Who use the Ländler as a digital platform on just over 2 million hectares globally by now. Let me give you a concrete example how one of our clients, a larger retailer, actually uses Ländler on this 3M journey: measure, manage, and monetize. They start by measuring the natural capital. It's just a fancy word of the financial market for nature, for healthy soil. They start to measure first the natural capital development of selected supply chains. To do simply have to upload the supplier's polygons into Landler's natural capital account, which then is continuously fed with outcome-based field-specific data using innovative remote sensing and AI technologies. This secures the IFRS requirement of identifiability because an outcome-based measurement is linked to each plot of land at any point in time. So what you see here on the left-hand side is basically the standard natural capital account for every field. They upload field by hectare with a, as I said, hectare resolution, which is compiled from a limited set of remote sensing taken and ground truth data. And we're going to have a discussion on this in a second. But it then can be enriched with further ground truth data, specifically when it comes to soil health and biodiversity with eDNA, no rDNA, I'm sorry for now, and camera traps, voice recorders, etc. So the indicators we currently look at here is biodiversity aspects, basically the biodiversity area on a plot of land, water holding capacity and soil moisture, above ground carbon, and to a certain extent below ground carbon. And I would love to say soil, but that's probably the reason why I'm here, because in line with what you said, Madeleine, we didn't find good enough data yet, which we couldn't just plug in and use with a good enough confidence interval, because this is used to make investment decisions, and no model is 100%, but it should somehow relate to what you see on the ground. We tested soil grids, now we test Specialize and all the others. But yeah, I guess this is why I'm here. Now, how do we measure? As said, we use remote sensing technologies on selected for selected indicators. We have a much longer wish list, but our benchmark sort of is accepted by the chartered accountants. So we only found good sources for those 3-4 indicators I mentioned, which then is pre-validated ground truth by our data providers. So we try to reinvent as less as possible here and use existing data, which then is checked by our scientific board from a few known institutions who make sure that the models, the assumptions actually are up to latest science. Let me give you a quick look into our high-level engine room. So our core competence, our main playing ground is here, this natural capital account, where we compile, where we aggregate data from all sorts of data sources and make it available for mostly financial reporting towards risk and investment management, but also obviously some of the data is relevant for the companies and the farmers for compliance and sustainability reporting. But basically sort of the green fields is what we do in-house, some modeling, some machine learning, some pre-processing, but we try, as said, to work with as many as possible. And I hope after this conference, I can add here many more logos. We call it collaborative landscape. With some, of course, we have overlaps, but I think we just don't have time to think in competition, but collaboration. So I'm fully with you and think of also innovative ways to collect, compile, process, and present the data. Because there is this new unexpected ally, the financial market, who says, if you give us good data, we channel money into land use change, and this is exactly what we need. Now, this was the first measure. And the second M, which stands for manage, is, as I mentioned, is sort of the requirement in financial market terms, controllability, that you can actually acquire the securitized attribution right to use the measurement results. So you don't invest into land, you don't own the land, you just have the securitized right to use the measurement results towards a bank, towards an insurer, towards your clients, and I'll show you some examples of it. So in Landler, this is done in the portfolio management, where then basically the securitized attribution rights can be controlled and managed at scale. That was the second M. Now the third M is the monetization. which then the client, in this case, this retailer, can use in different ways. One is to get better lending conditions because the natural capital risk can be demonstrably reduced. Second, gain competitive advantage in the market as investing into more regenerative and more resilient supply chain actually isn't a profit and loss position anymore. And third, strengthen the balance sheet because they can hold tradable green assets. I want to spend a little bit of time here because I think this is sort of a key input from our side, complementing the great scientific work and data discovery you do, just to show you how this basically find its way into this new boardrooms, into this new decision-making processes in the financial market. I guess the third one, stronger balance sheet. If you can create assets, that's clear. It's like in the old world, you would call it a carbon credit. Second, you have new revenues. So you have an income, there's an economic benefit. But it depends on a secondary market, in this case for nature contribution, so beyond carbon, clearly. The first two ones are actually the more interesting ones because they're not dependent on an external market, on a secondary market, but they're actually purely internal business driven. How does this work? And sorry, there's some German involved here because it's just taken from a concrete report. Assume you are a farmer, or assume you are a processor buying from a farm. And let's assume you realize that nature and climate and weather is somehow going wild and you carried out a risk analysis. So this risk analysis typically comes with a 25-kilometer resolution, and we do this together with service providers. So this large yellow pixel is basically the risk pixel, in which the small yellow parcel, which is the actual farm, is located. Now, this is just an excerpt. It shows, surprise, surprise, that in this case, the climate is a bit getting out of control, but they primarily have a drought and a heat issue, which in this case, it's a hazelnut farm, is even beyond what hazelnuts can deal with. Now, unfortunately, the hazelnuts are planted, so taking them out would be a tough decision. So what they actually did is to upload those farms, those fields of the farm, and use then Landler to actually see, and we can go back about to 2017, what actually happened on this specific field. So the risk profile in this bigger parcel says it's getting drier and warmer. But what you see here, and this is just an excerpt from their natural capital account, that due to whatever they do on the ground, we are, and I think somewhere here we had this question in the morning, so we don't monitor the input, the practice, but just the outcome and whatever the farmer implements. But this somehow led to a slightly increase of 6%, it was mentioned somewhere, over time of the water holding capacity. And the last year, it was so dry that even, the built up humus and roots were getting dry, were dying. So it dipped a little bit, but the overall trend was positive. Now with this, they went to the bank and said, I need money. And the bank said, yes, but you don't get it because you're in a area which is prone to drought risk. But then they said, yes, we know, but actually the practices we implement prove that we actually de-risk this location. And as a result, the bank said, okay, first in time, now we actually get data. They call it sustainability linked loan, where they can define a target. And as a result, this company now needs to pay less interest because they can prove outcome-based continuously that actually the practices they implement on the ground deliver. It's just one example. Another example, and I don't want to bother you with too much business stuff here, but what we see in the market is, and this is the example of what I called earlier, gain competitive advantage in the market. What we see is that many companies, even the big ones, Cargill, Pepsi, Unilever, they have their regenerative farming programs where they pay farmers more because they want to support regenerative farming. But if you then say, well, this is great, why don't you do this? Why don't you do this everywhere? They say it's too expensive. I mean, we can do it on a small pilot project, but if we do this at scale, sourcing from regenerative sources actually is a competitive disadvantage because we are just the more expensive alternative in the market. So what you can do with this to say, okay, basically the market price in this case, I think was oats is 180. The sustainability premium was 17 cents. So by actually paying the farmers more, the product got significantly more expensive. Now with our tool, what they can do is to say the 17 cent or then extrapolated to the hectare, 425 euros per hectare. It's actually not just a donation to the farmer to feel good, but actually it's an investment into business continuity, which creates value for me. So you can put it on the balance sheet because there is an outcome-based measure linked to it, and means it is off the profit and loss account. So your procurement cost is actually stays at market price, meaning you can offer your product as a more competitive rate, because what you do here generates economic value. It secures your business case, and the financial market is starting to accept this. Now, there's various ways on how to do the monetization. It's basically an entrepreneurial decision depending on where the company stands. But what we do hear from CEOs and CFOs is that this sort of changes the game, because finally there's something in it for them investing into sustainable land use. From a financial market perspective, companies doing this are the more attractive enterprise because critical natural capital exposure data is disclosed. In this sense, landlords measure, manage, monetize, and I need 2 more minutes just for your peace of mind. Landless measure, manage, monetize approach provides an end-to-end natural capital management platform that qualifies investments into nature as assets because they are identifiable, controllable, and they generate future economic value. For land stewards, for farmers, for off-takers, for investors, investments into natural capital isn't or doesn't compete anymore with their core business, but actually it enriches the business case. And if we look at what's currently happening in the new budget discussions at EU level for the next CAP, could it be that such tools, such transparency and assetization infrastructure also contribute to what they call an outcome-based benchmarking system, as suggested in the strategic dialogue for the future of EU agriculture, or recently published in the EU Commission's vision for agriculture and food? Imagine every farmer would have a natural capital account, making its ecosystem services visible and investable. This this would change the game, because all of a sudden, as I mentioned, paying for ecosystem services or investing into healthier soil doesn't compete anymore with core business. So this is an innovation that can be built in Europe. The technologies are there. Considering investing or financing the transition, an asset packaged in securitized contracts actually makes the transition bankable. Let's put nature on the balance sheet, which is also our tagline. And yes, of course, there's tons of questions, not only from a data perspective, but also financially and contractually and so on. But it seems there is enough ingredients available, convergence, data, tools to start. The rest will sort out as we go. So let's get going. There's quite some willingness to move with this new sector, the financial sector, because they realize financing the transition is an interesting investment that secures and enriches the agricultural business case in an operating environment that has changed. Thank you.